Okay, fellas. So today is Monday. Is today Monday? Okay, so I'm sorry. Today is Tuesday. Tuesday, the 4th of April, 2023. And this is end of market review, right? So I'm sorry if you're hearing me chew on something. I'm actually having the Mentos. I'm about to have the last one now. Let me put it in my mouth. So as the last Mentos. Mm, don't worry. When my channel is on, when this channel is at 100k subscribers, Mentos will give me a sponsorship. LOL. So gold right here on the charts, as you can see, 4-hour time frame. We're still within this consolidation, right? And obviously we know price is bullish. Now, from further understanding of the market, right? It's also something ICT teaches. And I'm just really having fun, like learning ICT because like number one, it gets really complicated, but one thing I've noticed is like you can't be lazy when you're watching ICT. You can't be lazy when you're watching ICT because like you actually have to watch a video and immediately you're watching the video, you have to go to the live charts, right? Maybe with your backtesting tool or whatever, and you have to look for what he's teaching because you only understand it when you see it in price action. So today he was talking about interest rates and how it correlates to the dollar, and how you can have like SMT divergence with the 10-year bond, the 30-year bond, and the 5-year bond. And when he was saying all of this in the video, like I really didn't understand. There were diagrams, right? So I kind of understood the basis, but I was like, how is this even going to be important? Until I went to the charts, I went on the charts, and then I found SMT divergence, looked at the three, the 30-year bond, 10-year bond, and the 5-year bond, found the divergence, looked at the DXY, found the divergence there, and I'm like, okay, this actually builds a storyline, right? And like that's just to show you like whatever ICT teaches is important to like not even ICT, your mentor in general, whatever mentor you have. If the person says this is how I trade, or this is what I look for, or this is what I look at, it is your job as the student to go back in price and look for what the person is talking about because you have to play your part. It's just like do your own research, right? Just like someone tells you, look at this awesome thing I found or this, and you just buy that idea. That's wrong. That's very wrong. You actually have to do your due diligence, right? You have to do your due diligence. You have to go back and you have to go over the information that this person has presented you with. It is important that you do that for your own benefit. It's important that you do that for your benefit. Because if you don't do that for your benefit, like um, I don't know what to say, you can never really learn and you can never really gain confidence in what you've learned. Because you might trust it so well. Let's say your mentor talks about this, you go, you try it, it works, you try it, it works. And then you're like, I found the new gold. And then you try the third time and you're like, maybe this strategy, let me risk everything on it. And the day you just decide to risk, the day you decide to increase your risk is the day it's not going to work. And then you're disappointed and you're let down. But yeah, so looking at these highs have been taken out, right? And what is price doing after taking out those highs? It's consolidating, it's accumulating. What is it accumulating? What do you think is accumulating? When people see this, what do you think they're thinking? Reversal, like everybody wants that reversal. Everybody wants that reversal. Everybody always. I remember when I used to trade like retail with the retail mindset and all that. Whenever I saw something like this, it's like it's reversal, but this is actually looking more like a continuation. At the least or at the most, what we could get is, like I said, maybe a pullback, fake move, and then continuation. But like generally, price is going for these highs here. Like this is the draw on liquidity. When I say draw on liquidity, it's like the nearest liquidity price wants to go to. Well, if we don't see this, then you know, price is pushing for this highs here, equal highs. We have equal highs here, and maybe this high. Right now, I'm not saying this is not a signal. I'm just also learning. I'm just pointing out. By the way, this is just how you frame like the higher time frame bias. Like when it comes to the higher time frame charts, like the monthly, the weekly, the daily. Like if we look at the monthly, right? Let's look at the monthly real quick, right? If you look at the monthly real quick, there's two things that's either going to happen, right? If price breaks like this and then comes down like this, right? This candle becomes the breaker block, right? And you see price do something like this and then continue down for this sell side, right? So that's one scenario. Another scenario is price could go form under equal high, come back for this as another block, and then continue up, right? Or another scenario is price could just come down this other block before it pushes up, right? And this is on the monthly time frame. So where's the draw on liquidity on the monthly time frame? Here. So on these higher time frames, we are bullish, right? Same thing here on the weekly, fair value gap. You can see that there's a fair value gap in this candle here. Price might leave this fair value gap, go for the highs before, I don't know exactly how it's going to do it, right? Because I'm still learning. I'm still in the learning process. So I'm not expecting my calls to be super, super accurate, right? So that's what I'm saying. Don't try to take any of the things I'm saying as a signal because you just end up hurting yourself. But yeah, we know on the higher time frames price is bullish, right? Even me from like my own little experience in the market, right? I can tell that okay, price will want to run stops above these highs. You see here again, price run stops above these highs, right? Which is dope. Price run stops around above this high, and what is it doing? It's consolidating right there, right? So again, if you can see right here where the other block is, right? You can see this other block on this candle. Let me just mark it out like this, right? This is part of my own learning process. Please, I really don't want anybody that watches this to want to take this as a signal, right? So this is another block. Again, what can we see here? Consolidation, right? And we're going into Asia session, Asia pre London, whatever. So London session can come with a Judas swing or a turtle soup. So let's say price consolidates, and then does something like this, right? And then reaches for these equal highs here, right? So this could be one of the ways it plays out tomorrow. Well, again, that's not my strategy, but I'm just marking out charts because I really want to you know, learn. It's part of the learning process. So let me go back to the trade I actually took for today. And one thing about this strategy I'm trading, I don't give a fuck about the daily bias. I'm sorry, I shouldn't use that word actually. I shouldn't use that word. I'm trying to actually become more conscious of the kind of words I'm using. So just what I'm just trying to say is like the daily bias is not important for my strategy. that I'm currently trading. So that's a win-win-win for me though. That's huge because it alleviates, should I put it that way, alleviates the need to be so precise for precision. Because like when you know that like the higher time frame is bullish, right? Like what you then have to do is you have to know where your entries are going to be and whatnot, right? What levels to mark out, what candles, what other blocks, and all of that. And in here, we know that okay, this red line is where the hourly order block is. And now we have this huge down candle. Have this huge down candle, and we know that price ran up. So does this become an order block, right? Where did he run into? He ran into this candle here, which is another block. So all of these things, man, if you just really start putting it together, well, it takes a lot of studying and a lot of practice. So I'm not trying to disrespect the work that ICT has put in by just making foolish mistakes and trying to teach rubbish. I'm not even trying to teach, I'm a student. I'm a student. That's why I say if anybody wants to learn his concepts, please go to his YouTube channel and learn from him himself. Don't learn from me, please. Don't learn from me because I'm learning. I'm learning. I'm actually learning. Right? So I tell you back to my entry. This trade was very simple today. It was all my trades are always simple because like it's the same thing, right? And even as I'm learning ICT, right? If eventually I get to switch strategies, it has to be something like the understanding I'm getting from this strategy and this process that I'm going through is just trying to understand how to have how to build a trading plan and how to have like mechanical rules in place for your entry. So you want to be trading the same setup. It doesn't have to occur every day, right? You might not necessarily want to be a day trader. You might want to be a swing trader or an intraday trader. You know, you want to be someone who is taking one or two trades a week. Even if you have like a job, like you can structure a trading strategy around your job where it's like, okay, you're not going to be on the chart so long, or you're not going to have so much time, or you're going to only be able to trade London session or something. Like you can structure a trading plan around that and just really be patient. Like I get to trade every day, but only during certain times. And you can be watching price action and you might see a lot of moves. I'm not allowed to take any of those trades until it gets to 230. So you see that there's still an element of patience because I have to let whatever setup I see in London session, I can't trade it. I cannot trade whatever setup I see in London session because it's not a part of my plan, right? So sticking to the trading plan is very important. I can take a loss on my entry, and the next thing I can see a re-entry. I am not allowed to take a second trade because my rule says one trade a day, right? So that's just basically how it works. You want to have that kind of structure. You want to have that type of patience when it comes to trading. Okay. So now fair value gap between the low of this candle and obviously the high of this candle. I marked out the high of this candle because that's where my entry is going to be. So you can see this candle 227, 228, 229, and then the next candle at 230. Price was still within this fair value gap. You can see where the candle of 230 opened. You can see the open of this candle at 230, and I was at the chart. I was by the chart. So immediately price opened by 230. I got into the shorts when price started to push down, and you see price fell aggressively, right? Triggered going into the trade right here at my entry. Boom, boom, boom. This was like straight to TP. Price didn't even pull back. Price just fell directly to take profit. So there are days, oh, we have trades like this. So currently I'm sitting at 3 wins in a row, and I'm up 6R, right? 6R, risking half of a percent, right? That's 3%. 3% on, let's say, $100,000 funded account is what? $3,000. Or on a $200,000 funded account, that's what? $6,000. On a 300K funded account, that's how much? $9,000. On $1 million funded account, right? That's how much? That's well over 30K, or sitting around 30K. Profit split and all of that would be like 20 something thousand dollars. So, in your right senses, let's say I was trading, because I'm actually talking to myself right now, because if I'm trading a prop firm account and I'm funded, let's say, $100,000, and I'm up 6R, right? Do you think I'll keep trading? Not at all. Because, and I want to say this because, like, I don't know who's going to come across this video, and you might maybe be funded or plan on getting funded or whatever it is at that point, or maybe even managing capital, however it is. Like, sometimes you need to know when to just stop and take profit. You need to know when to pull profits out. And I'm not saying pull profits out because you're greedy or whatever. I'm just trying to say, like, you actually need to learn when to not be greedy. Because imagine being up 6R and then you keep trading and you get greedy. And you're like, man, I've made 3%. Let me try to make 10% for the month, right? And then you set these expectations because you're up, you're in profit, you want more. If I was, if I had a funded account right now and I was up 6R, which is 3% with my risk model, with a 1% risk model, that's 6%, but I'm not going to use a 1% risk model. Half a percent, and I'm up 3%. I'm taking them, I'm going to stop trading, especially if it's a funded account. Because when you look at your bank account and your bank account is saying 0, and your trading account is saying $3,000, you want to take that $3,000 first. The funded account is not going anywhere. You've secured profits, healthy profits. There's no need risking that again. You need to take that out. Just stop trading. Be patient. Go and do other things with your life. And you know that at the end of the month, you have 3K waiting for you, right? At the end of the month, you take that out with your refundable fee and whatever. You take that out. Then the next month, you go in again. Once you hit like 4R, because my own goal with this strategy is 2R to 4R. I know that this strategy can give me way more than that, but like I'm very comfortable with 2R to 4R. 2R to 4R is 1 to 2%. That's consistent and that's realistic. I know that this strategy can give me more than that. And obviously, I'm going to keep trading because I have to complete the 20 trades. So currently, we've taken 9 trades, 5 wins, 4 losses. So that's even above the 50% strike rate, right? But I'm going to take the full 20 trades to see the full outcome, right? Because we back tested 20 trades, now we're forward testing 20 trades. So I'm going to take the full 20 trades and see if this strategy can give me more than, let me not sound overconfident or let me not try to be too confident. I want to see if this strategy can give me more than 4R. I said 4R. If this, how much R can we make with this strategy, right? If we can do up to 10R, that's great. But for me, if I'm in the live markets and I'm funded, 2R to 4R is okay for me because if you're funded 6 figures to 7 figures, 1 to 2% is great returns. And I don't see the need to be greedy, right? Obviously, yes, you can make more, but have that money in the bank first and then proceed. So I'm just going to end it on that note, right? So this was a trade for today. Very simple trade. And you can see what price did, consolidation, manipulation, and then distribution to the upside. So I'll see you guys in the next episode.